Hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Tuesday morning and the cues coming out of global markets are fairly positive. You had some earnings that came in over the weekend, the likes of ICICI Bank, and the numbers have been pretty good, so the street will be reacting to that as well. The GIFT Nifty this morning hinting at a triple-digit up move, so looks like we are in for a 160-point kind of an up move on the Nifty. But of course, there is the entire Zee Sony saga that has played out. So Zee shares will be particularly in focus in today's session. Aside of that, lots of earnings to watch out for today as well. We'll be talking about a whole host of stocks. We'll be talking about the implications of the separation between Zee and Sony and what it means for the entire media industry, and a whole lot of other issues will also be discussed on the show. So if you have any queries as well, stock related queries, keep them coming in on our live feed on YouTube. We'll try and take them up and address those queries with our technical expert on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street enters bull market territory as the S&P 500 and Dow Jones hit record highs last night. Asian markets open higher while the GIFT Nifty is also indicating a triple-digit up move for the Nifty. Well, the Brent is back at $80 a barrel as Ukraine reportedly attacks a major Russian fuel terminal over the weekend, raising renewed concerns about supply disruptions. And Sony calls off the $10 billion merger with Zee, seeks $90 million in termination fees and alleges breach of the merger agreement. Zee says it will consider all options, including legal recourse against the Japanese conglomerate. And ICICI Bank's third quarter numbers beat estimates, but net interest margin hits a 5-quarter low. Cipla delivers a beat on margin revenue and net profit. And in key earnings to track today, Axis Bank, Havells, Pidilite and United Spirits will report their third quarter report card. And Prime Minister Modi leads the much-awaited Ram Mandir's consecration ceremony in Ayodhya along with RSS chief Mohan Bhagwat and UP CM Yogi Adityanath. Thousands of devotees converge in Ayodhya with this, one of BJP's decades-old manifesto promise, reaches a finality months ahead of the Lok Sabha elections. Well, without any delay, let me bring on board our technical expert on the show. Joining me is Sacchitanand Uttekar, who is the VP Research, Derivatives and Technicals at TradeBulls Securities. Great to have you on the show, Sacchitanand. Last week was a turbulent one. We saw a massive sell-off coming in on the Nifty Bank Index and, Nifty as well, triggered by HDFC Bank, and, we saw massive sell-off by the FI community as well last week. But this morning, cues are looking pretty good. GIFT Nifty is hinting at a triple-digit up move. We have ICICI numbers to digest, which have been better than expectations. Here on, do you expect the, bulls to continue moving upwards and all the, hiccups that have happened are a thing of the past now?
Good morning, Nandita. Clearly, last week we saw some profit booking pressure and Nifty did, drift towards its 5-week exponential moving average support, which is placed at around 21,500, 530 kind of a zone. Now, this was the 11th consecutive week wherein this index has faced some resistance, but it has also found its support at this particular level. So, if you look at the overall data which has been formed last week, we saw multiple spinning top formations, narrow range bodies, which are indicating more of a consolidation here. And within this particular formation, there is an island reversal, which is a bullish reversal pattern, reconfirming the base at around 21,530. So I think going forward, it will be very interesting. I think it's a truncated week. The options data is still indicating that 21,900, 22,000 would be a very strong hurdle on the upside. But on the lower side, 21,500 looks like a decent support for this particular week. So we may see, the positive opening led by further, built up on the long side. So we are expecting that the markets may remain trending higher within this particular range of 21,500 to 22,000. So I think once we have a strong positive opening, we may see some follow-through actions during the day.
All right, that's the view on the Nifty and the levels to watch out for. Hold that thought, Sacchitanand. We'll talk about specific stocks, in a bit. Let me also bring on board Nirav Karkera, who's the head research at Fisdom, joining in this morning. Great to have you on the show, Nirav, as usual. But, over the weekend, we had some bit of news trickling in that, Sony has called off its mega merger with Zee. Of course, they've also sought $90 million, as a result of the charges, right? But going forward, do you expect, Zee's existence to be at risk, given the fact that it may be a good asset, but they have a whole mountain of debt, right? So, what does this merger being called off mean for Zee particularly?
So the Zee Sony merger was something we have all been waiting for since quite some time now. I believe it was sometime towards the end of 2021, particularly September 2021, when the merger proceedings began. And ever since then, this merger has been embroiled in some controversy or the other. Right from the CCI intervening to the SAT. However, as we progressed in time, we saw most of these concerns getting ironed out, and there was increased hope that this deal would finally go through until very recently that we saw, things really take a U-turn for the worse and the deal fall through. The Z Sony deal has been, has was being followed. Because it would be one of the greatest, I won't say just a marquee, but a landmark deal in the media and entertainment industry. It would set the tone and precedent for all future deals to come, but that did not happen. This deal was important for Z. There is no denying to that. And, with the deal, Z stood to benefit greatly. All shareholders of Z stood to benefit greatly. The joint venture was poised to become one of the largest players in the M&E industry. Right, but going ahead, there continues to linger. So the problems continue to linger on for Z. So any sort of comfort or cushion that was expected in the form of Sony entering the board and the cap table is taken away now. So Z will have to deal with its problems like before without any additional comfort and support. If nothing, it will have to deal with incremental problems in the form of litigation from Sony, at this point in time. Of course, Z is saying that it would fight the case back strongly, and it has a case of its own to make, and it will be litigating and moving a plea against Sony in itself. But all of this litigation only takes away, two important things, that is time value and the opportunities that Z could be investing its resources into at this point in time. So this drag is not really a win for anyone, and definitely not for Zee Enterprises. One important thing to note is that the promoter still owns a very small stake in Zee overall. We still have a large majority of the cap table being owned by institutional investors, very specifically, right? So there is still scope and hope that institutional investors may get together and try and resolve any differences and iron out the deal going ahead. However, it's not going to be the same as what was envisioned before, because if it would have happened the way it was supposed to happen, life would have been so much better. But now with the litigation making things messier, it's not going to be easy for institutional investors also to move the board in favor of the merger in any other way. So for now, we are going to see all of this stalled, while the case still remains strong for Z to undergo a good M&A exercise. But the process will be stalled for now, while we believe institutional investors will continue to make moves and push the board towards achieving some sort of resolution that will be in favor of all shareholders.
Right, actually you've answered two questions at one go. I was about to ask you about, what happens to the institutional support that the company really enjoys. But, given the fact that Zee's All India TV network share has improved, in fact, Z5's position in the market has also improved significantly, right? Do you see any possibility of, this drawing fresh bidders, perhaps in the form of, PE investor coming in? Or do you think that looks like a remote possibility now, given the fact that we are staring at a long-run legal battle now?
So, while Z is a wonderful asset, and like you said, the market share of all assets have been increasing, at a very promising pace. It makes it a good target for acquirers. However, I personally believe that this is a play for someone who has strategic interests vested in Z's assets. At this point in time, it doesn't seem like it is going to be a private equity play. It could only attract strategic interest, and among those who could, or rather who have a strategic interest, Sony was among the larger ones every other player is playing a game of its own. On one end, you're talking about Reliance, you're talking about Disney, in talks with each other. And, there are very limited other players who have the intent as well as the ability to absorb an enterprise such as Zee, right? And there needs to be a certain headroom, a certain value proposition for private equity investors, which I don't see Zee holding right now, at least for private equity investors. So, of course, the asset is attractive for various players who would like to build on from a strategic standpoint. But right now, the number of such players are very limited who have the willingness as well as the ability, both of it together, to absorb an asset such as these. So probably things will be stalled for quite some time now till a fresh round of bidding is reinitiated. And hopefully we either see some of the names that we already know or some new entrant really come into the mix. But this is going to be some time from now, because the current problem at hand is with the litigations, and I feel whoever the next strategic investor would be, if at all, would want this entire litigation cleared off before making any progress in any sort of fashion.
Right. If you look at the views coming in from global brokerages, all of them, most of them rather, have pointed out that the valuations may be at risk here for Zee. And the stock has also attracted downgrades from the likes of CLSA as well as Citi. What are your own thoughts on where the stock is headed from here? We are getting a few, in fact, a lot of queries on our live feed as to what one should be doing, particularly with the shares of Zee right now. What would your advice be?
So Zee is in for a long drawn stretch of trouble. The way we look at life, there is definitely going to be a valuation markdown, and majorly on the back of the fact that most of the valuation accretion that we have seen in the recent past was on account of this deal going through and expectations of this deal going through. Now that that is out of the picture, we believe there will be a significant markdown anywhere in the range of 40 odd percent from where it stands today. We are talking at Zee to come at a PE of somewhere between 10 to 12 times of PE. This would peg the prices at 40% lower than what it was on the last trading day, which is approximately, we are talking about a range in 180 to 85 sorts of a range. Is what we are expecting as as an immediate reaction. And of course, from there on, the direction will be determined by how the process goes on and how the developments unfold over the next couple of weeks. But right now I feel 185 and the broader range is where we are looking at Zee's value at a share price level, and 35 to 40% markdown in terms of valuations, majorly attributable to the reversal of all positive anticipations that were riding on the back of this deal. So even today is going to be quite a day for Zee investors. We expect the prices to really experience a steep decline. So for those who are in for the longer haul, I feel it could be wise to probably partially move out and wait and see how does the developments happen. But those who were really counting on this deal in terms of adding value to their shareholding, I feel it's going to be a long time for now. So it's basically up to you. If you really have the patience and the belief, you could continue holding on, or you could try to seek and re-enter as more and more clarity emerges.
All right, that's a view on Zee. With that, Nirav, I'm afraid that's about all the time we have. But really appreciate you taking out time and joining in this morning and putting things into perspective for us.
Thank you.
Well, that was the view on Zee. Long run battle, valuation markdowns, and of course, if you are extremely patient, then perhaps and if you're in it for the long haul, then perhaps you could remain invested in this one. But let me come back to Sacchitanand and talk particularly about banks. HDFC Bank, of course, that led to a sharp fall on the Nifty Bank Index last week. But ICICI Bank's numbers could provide a balm, right? Because there were fears that that the kind of numbers that were reported by HDFC Bank could be like a systemic issue, but that really has been put to rest by ICICI Bank, given the fact that the numbers have been good, commentary has been good, although margins did see some bit of compression, but that management is not really very worried about that going forward. And Axis Bank also reporting numbers today. Margins could be an issue here as well, given the fact that deposits are still getting repriced. But on an ICICI Bank and Axis Bank, how would you expect these two counters to fare over the next few sessions?
Well, Nandita, it is one of my top picks for today. In fact, ICICI Bank, the way the price action responded, to the 980 support. We have already seen a very strong recovery process here. And if you look at the major structure, the stock was, consolidating for the last 3 weeks. Clearly, there's a sign of a bullish flag formation, which is again a continuation pattern indicating that the ongoing bullish trend is expected to continue. So we are of the opinion that any declines towards 1000 levels, 1010 levels would be an opportunity to add fresh long positions here. Disclosure would be that we have also recommended it to our clients. We are expecting that there could be an immediate swing towards 1022 during the day. But we see a good extension move towards 1050. So I think on every decline, the stock can be accumulated even from a portfolio perspective as well as trading. From a trading angle, I think for the day, 1005 could be an ideal stop loss where one can trail their positions higher and fresh long positions for an intraday target of 1022 followed by a positional target of 1050.
All right, that's the view on ICICI Bank. We had a couple of queries also coming in on this particular stock. Hope that answers your queries. But let's talk about, some of the mid-cap IT names like Persistent and Coforge. The numbers came out over the weekend. In fact, Persistent Systems has also, announced a stock split in 2:1 kind of ratio, right? Coforge also good numbers. Although fall in margins has been offset by strong revenue growth. Compared to large cap names like TCS, Infosys, do you think one should now look at the likes of Coforge and Persistent, or do you think because of the fact that mid-cap IT has done fairly well, perhaps these shares could be in the overbought zone? So what should one really look at? Should one look at these two particularly, or should one stick to the large caps? Chartically, how are things looking?
I think chartically both the pockets are at an interesting juncture. We don't see any major distortion when it comes to Nifty IT as an index and its constituents too. If you look at the data of persistence, yes, on the weekly scale, the stock price action has been a little stretched. So probably some cool off and consolidation will be overall healthy for this particular trend. On the lower side, we don't really expect the stock to slip below that 7,000 mark. I think there's a very strong durable support on the long-term scale, and even on the short-term charts, any decline towards 7,400, 500 would be again a good opportunity to add long positions. When it comes to Coforge, the stock recently displayed a very strong breakout above its 2021 October highs. And since then, the stock has been sustaining well above that 6,000 mark. Now, if you look at the overall long-term structure, it looks like a classic accumulation pattern, a rounding bottom formation, giving a breakout somewhere close to around 6,000 levels and indicating a price target somewhere close to around 7,400. So the major trend still remains bullish, and every intermediate opportunity would be would present a good opportunity to add further longs in this particular counter. On the lower side, until unless we don't see any major slippages below 58.90 on a weekly closing basis, I think the major trend would remain intact, even in the case of Coforge.
All right, that's the view on mid as well as large cap IT shares. But let's take up some of the viewer queries that are trickling in this morning. A query coming in on SBI card from Rupak Mehta. He wants to know, he's invested in the shares and he wants to know whether he should cash out and put money in some other scrip, given the fact that, SBI card has been stuck in a downtrend. If you look at yearly charts, in fact, 6-month charts, most of them have thrown up negative returns, right, over these periods. So going forward, is there a better play to look at rather than staying invested in SBI card?
Definitely, there are better plays. In fact, if you look at the major trend of the stock, it has been more on sideways line. If you look at the data from July 2022, the stock has really not done much, and it has been, oscillating within this particular range of around 700 on the lower side, and it has been finding a lot of resistance somewhere close to around 950. So I think until unless we don't see a major firm breakout above this particular range, the stock may remain oscillating. But since it is quoting near to the near to its lower base, so ideally I think the reward to this opportunity would be good. But there is an element of confirmation here which is needed, and until unless we don't see a firm reversal formation on the weekly scale, it's ideal to refrain from adding any or averaging any further long positions here. On the higher side, this level is placed somewhere close to around 780. So in case if we see the stock trending above that particular mark, then I think there's a good opportunity again for a strong rebound towards 900 level. So I think you can stay invested, keeping a stop loss somewhere close to around 720 on a weekly closing basis.
All right, that's the view then. Rupak Mehta had written in on this one. Hope this answers your query. The next query is coming in from Rajesh Veera, and he has a query on Ashok Leyland. He's holding 73 shares at the rate of 178, average price, and he wants to know whether he should be holding on to it for the long term. The stock is now at somewhere around 175. Should he continue to hold, or what would you advise him to do?
Definitely a hold. In fact, he can also accumulate this particular counter in case if there's a correction towards 155. Overall, what we are observing here is again classic breakout from a rounding bottom formation, which was exhibited in the month of June 2023 near the 160 mark. And since then, the stock has found a good strong base near that particular level itself. So I think the overall pattern is indicating a price target somewhere close to around 240. So there's an ample of room on the upside. And even if you look at the way its monthly ADX has been, trending higher, there's a good strong possibility that in case the moment we see a breakout above 185, 189 kind of a zone, we may see a strong vertical rally unlocking, further fresh momentum here. So I think it's a good stock to accumulate. One can retain in the stock in one's portfolio. Even from a trading perspective, we may see a swing towards 185, 190 zone, eventually, extending towards 205. He can keep a stop loss somewhere close to around 155 on a weekly closing basis and accumulate the counter in his portfolio as well.
Right, a bullish view coming in on Ashok Leyland. Hope that answers your query. But the next one is on one of the tire stocks, CEAT. Pooja Mehta wants to know your thoughts on this particular stock. Tire stocks have been on a roll, Sacchitanand. If you look at, I think Saturday's price action up 15%, right? Would you advise investors to chase this momentum, or do you think partial profits could be booked here?
I think investors don't chase momentum, so I think the stock is already trending very well. In fact, it's a good idea to keep trailing your stop losses higher and wait for a clear cut sign of reversal. So even here, the kind of base that was formed at around 2200, we don't see that particular base getting violated soon. And on the lower side, the recent up move that we saw after breaking out about that 2500 mark, I think that is the near-term support which is defined. And on the higher side, despite of the run-up, its RSI and ADX are still in a comfortable zone on its monthly scale. Its RSI is somewhere close to around 73 without any negative divergence. So I think probably we may see this particular rally getting continued and stretched towards 3600, 3700 mark. So I think it's a good idea to hold on to the counter. Any pause or a decline would be a good opportunity. From a trading perspective, the stop losses can be placed at around 2500 and positions can be reviewed once the stock starts trending around 3600, 3700 mark.
All right, just a last query for today. We're running out of time here. Lokmanya Rampilla wants to know your thoughts on whether or not it's a good time to buy into LIC. LIC, of course, as a share has seen quite a bit of an up move in recent times. Would you advise a buy now or wait for dips?
Definitely here, chasing momentum can be healthy. If you look at the recent price action at around 870, we saw the stock again, confirming a breakout from a bullish pendant formation. The price pattern is indicating a move towards, 1030 kind of a zone, followed by 1120. So I think there's still a lot of headroom which is available. Keeping a stop loss somewhere close to around 845 on the lower side, you can still chase momentum.
All right, that's the view on an LIC. Lokmanya, hope that answers your query. But with that, we've come to the end of this query segment. But Sacchitanand, before I let you go, what are you recommending for our viewers? One of them was ICICI, as you mentioned. What are the others?
So ICICI and BPCL, these are two stocks which did fairly well in the last week. And if you look at the weekly structure of BPCL, again, it looks like a bullish continuation of flat formation. The price action has been very steady. It has been holding on to its 5-week exponential moving average well, which is placed somewhere close to around 460. So unless we don't see any major breakdown, we are expecting that the high top high bottom sequence will extend towards 510 on a positional basis. From a trading perspective, we are expecting a swing towards 505, and the stop loss can be placed at around 477.
All right, that's the view. Any FNO strategy for the day from an index perspective, Sacchitanand?
So from the index perspective, I think one can wait for the opening to sustain. And probably, once we have an added confirmation that 21,700 cluster is getting a fair amount of support, then probably we may expect an extension towards 21,930, 940 kind of a zone. So I think it's better to wait for at least half an hour. Let the support be defined. The anticipation is that the 21,700 cluster resistance may turn as a good support. So I think one can wait for half an hour and then probably start building long positions here for the eventual target on the upside, which is placed somewhere close to around 21,930.
All right, 21,930 upward target. Well, with that, Sacchitanand, thanks a lot for taking out time and joining in and addressing all of your queries and sharing recommendations for viewers as well.
Thank you.
Well, with that, we have come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. And of course, stay tuned because coming up next is Open Well.